Hard money loans can come with the lowest down payment of any type of investment real estate loan, including conventional, and that makes them really popular with investors. But a lot of brokers are scared of them because of these misconceptions. In this video, I'm going to break down those misconceptions and the truth behind them. And if you're interested in investment real estate loan brokering, please do subscribe. I post content like this every week. So the first misconception is that the hard money loan process is really daunting. Many people think that there's a deep dive into a borrower's personal finances, so how much money they make, what debts they have. A lot of people also think that there's excessive appraisals and inspections required, and that the underwriting process is really complicated. But for the reasons we're talking about today, that's just not true at all. The next misconception is that hard money loans are all super expensive and that they've got really high interest rates. That's just not true. It obviously depends on when you're watching this video, but right now, today as I speak, I can actually get a hard money loan cheaper than an SBA loan. So it does vary from lender to lender, of course it does, but hard money loans do not have to be expensive. Unlike conventional loans that always require appraisals, hard money loans do not. Each lender decides themselves whether they want an appraisal or not, and a lot of hard money lenders, they're comfortable conducting their own in-house valuations, desktop valuations, where they don't need a third-party appraiser to tell them what the value of the property is. This is why hard money loans can be really attractive to investors who want to close quickly and they don't want to waste their time waiting for an appraisal report to come back. Another misconception is that hard money loans are based on a borrower's financial picture. But because lenders use the property's current value and future value to determine their loan terms, borrowers don't need to worry about that. They don't need to stress about them not qualifying for the loan because they don't make enough money or because they have too much debt. Another thing that people worry about with hard money loans is that every hard money lender is a predator. It is true, absolutely, that there is the existence of predatory lenders in the hard money space that prey on unsuspecting borrowers. But there is a lot of people out there, both brokering and lending these loans, who are honest, transparent, who have integrity. I work with lots of them. Not every person that you encounter in this industry is a bad guy. The next concern that people have is that hard money loans negatively impact an investor's profits. But investors can actually accelerate their profits and their real estate portfolio by using hard money loans. There's two reasons for this. The first is that, as I mentioned already, hard money loans come with low down payments. So any capital that a borrower does have will go further. Let's say they have $200,000, they could use that to buy a property with cash, or they could use that as a down payment for multiple properties. And number two is that hard money loans provide fast access to capital. So investors can move on time-sensitive opportunities, purchases that come up that are great deals that they otherwise would lose by waiting for a conventional loan. The next misconception is that hard money lenders are difficult to find. And that can be true. It does take time to build relationships with hard money lenders that you trust. I often hear that hard money loans can only be used for the purchase and rehab of distressed properties, but you can actually use a hard money loan for a cash out refinance, both of a distressed property and of a property that doesn't need any work at all. A lot of people don't know this, but it's actually quite common to use a hard money loan to take equity out of your property. So instead of refinancing into a long-term mortgage, you can refinance into a short-term interest-only bridge loan. Again, perhaps you want to use that money to grab a time-sensitive opportunity that you see elsewhere. As a broker of hard money loans, all of these misconceptions that are out there, it just means that there's more opportunities for a broker to dominate the market by being knowledgeable about the products that are out there and how they work. I'm going to link my program that I mentioned in the description for you. Feel free to comment below with any questions you have about these misconceptions. Best of luck, and I'll see you next time.